A lot of people hate on Tesla and even more so on Bitcoin. So seeing Tesla buy $1.5 billion worth of Bitcoin puts a smile on my face. My name is Michael Wang, and in today's video, I'll be talking about why Tesla bought Bitcoin and what we could expect for Bitcoin this year. If you're interested in investing and trading stocks and cryptocurrencies, make sure to smash the like button to this video and subscribe for more quality content. Without further ado, let's get started. On February 8th, Tesla announced that it had bought $1.5 billion worth of Bitcoin and that it would be accepting Bitcoin as payment for its vehicles. And while Elon has been trolling people on Twitter by talking about Dogecoin and putting hashtag Bitcoin on his Twitter bio, no one really expected Tesla to buy this many Bitcoins. In the SEC filings that Tesla submitted, it said that they updated their investment policy to provide themselves with more flexibility and diversity to maximize their returns on cash that is not required to maintain adequate operating liquidity. And as part of the policy, they would be investing $1.5 billion in Bitcoin. Moreover, they also stated that they're going to begin accepting Bitcoin as a form of payment in the near future. In December 2020, Tesla raised about $5 billion through a share offering, and they've essentially used over 20% of the capital they raised to buy Bitcoins. And while this may sound insane, there's a logical reason behind why Tesla might have done this. Due to the pandemic in 2020, the Federal Reserve printed massive amounts of US dollars, and sadly, the US wasn't the only country to do so. All governments around the world printed unprecedented amounts of their own currency in desperate hopes that they could stop the stock market from crashing and causing extreme chaos. While they have successfully managed to stop a market crash from happening, like in 2008, they weren't able to stop the real economy from falling apart. And as a result, we started seeing asset prices inflate like crazy. Housing prices, stocks, and all other forms of assets appreciated in value significantly, partly due to high liquidity from retail investors looking to make a few bucks, but mostly due to the sheer amount of dollars being printed, causing inflation. So at this point, I hope the Bitcoin naysayers stuck around, because here's the important part. There are two important reasons why Bitcoin is a great investment for everyone, including Tesla. The first reason is that it's limited in supply, and this will never change. It doesn't have a 98% chance of not changing or a 99% chance. Bitcoin supply is limited to 21 million coins, period. This is set through a technology called blockchain technology. This is why Bitcoin is much better than gold in some ways. Traditionally, gold was the rule of thumb when it came to hedges against inflation and financial market collapses. But Bitcoin provides a better store of value as it is more convenient to store and carry, and is better than gold in the sense that its supply is completely fixed. With gold, we could end up discovering a huge gold mine in North Korea, but Bitcoin supply will be limited to 21 million coins. According to ARK Invest's report on Bitcoin, what makes Bitcoin so special is its correlation to other assets. ARK has revealed that Bitcoin's price action is not correlated to that of any other assets after having assessed the price action of tech stocks, gold, oil, bonds, emerging currencies, and even real estate. The only asset that showed a mild correlation with Bitcoin was real estate. And that wasn't because there was actually a meaningful correlation between the two assets, but because of how long bull cycles in real estate markets are. As such, because of Bitcoin's unique price action and the function as a hedge it provides, it's essential that everyone has a portion for Bitcoin within their portfolio. Tesla probably had this in mind when they replaced their cash with Bitcoin, but it certainly wasn't the first company to publicly buy Bitcoin to replace part of its cash. MicroStrategy bought over 21,400 Bitcoins at around 11.6k dollars. Square, which is one of the hottest fintech companies today, also purchased about 4,700 Bitcoins, which covers 1% of the firm's total assets. This is news from last year, and you might have said, well, MicroStrategy isn't necessarily the hottest and most prominent company, and Square has a reason to own Bitcoin since it's a fintech company seeking to offer a comprehensive payment solution. Well, with Tesla buying Bitcoin, we will see more companies add Bitcoin to their balance sheets without a doubt. While nothing has been set in stone yet, companies like PayPal, Apple, Twitter, and Uber are all considering purchasing Bitcoin. According to ARK's research, this graph demonstrates a hypothetical price increase if Bitcoin were to replace cash on the balance sheets of S&P 500 companies. If these companies invest 10% of their cash on Bitcoin, this alone would take Bitcoin's price to $400,000. A more realistic approach would be if we see companies following Tesla invest anywhere between 1 to 10% of their cash on Bitcoin, which would provide a range of $50,000 to $400,000. So comes the billion-dollar question. Where exactly is Bitcoin headed? I like to refer to two diagrams to answer this question. The first chart is Bitcoin's stock-to-flow chart. The stock-to-flow model measures the relationship between the currently available stock of a resource and its production rate. In the case of gold, the stock we referred to would be the entire amount of gold mined throughout history, while flow refers to the amount that can be newly mined. Gold is a monetary commodity, and it has a high stock-to-flow ratio between 50 and 60. The World Gold Council estimates that 200,000 tons of gold exist above ground, while the annual supply is around 3,000 tons. Bitcoin, similarly, has a stock-to-flow ratio in its upper 50s, as 18 million Bitcoins have been mined so far, and since 330,000 new ones are mined every year. The good news is, this ratio will continue to increase until it reaches over 100 around 2024. It's also important to understand that while about 18 million Bitcoins have been mined so far, a lot, if not most, of the Bitcoins that were mined during its early days are lost. People initially didn't expect Bitcoin's price to grow so exponentially, and there are countless articles about people who lost their Bitcoins, and it's most likely that they'll never be able to retrieve them, which makes Bitcoin's actual supply even more limited. We can also take a look at the chart I analyzed for Bitcoin's price cycle. Note that the data only starts from 2011. This is Bitcoin's logarithmic chart on the weekly scale. We can see that Bitcoin undergoes phases of consolidations and breakouts. The price consolidated from 2011 to February of 2013, and we saw a bullish rally lasting 10 months up to December 2013. We then had another consolidation phase for close to 3 years, and the price broke out once again in February of 2017. It rallied again for 10 months, topping out in December 2017. And then, for about 3 years, we had another consolidation phase, which looks very similar to the past two phases, and we started breaking out in December of 2020, which is a little earlier than the anticipated breakout date of February 2021. So then, with the premise that the current bull run will end in December of 2021, we can refer back to the stock-to-flow chart, which estimates that Bitcoin's price will be at around $105,000 by then. Considering that Bitcoin has a tendency to overshoot way above the stock-to-flow line, with retail investors joining the market in fears of missing out, we could probably see something similar happen this year as well. So what do you guys think? Does $100,000 sound too crazy as a target for Bitcoin? Or is it completely reasonable given that asset prices are inflating like crazy and that major corporations listed on the S&P 500 are willing to replace part of their cash for Bitcoin? Let me know what you think in the comment section below. If you like this video, don't forget to like and subscribe, and I'll see you guys in the next video.